Welcome back, my friends. Thank you so much for tuning in. We are back on track. Daily silver videos. So if you want updated on a daily basis of what's happening in the world of precious metals, geopolitically, economically, fundamentally, you're going to get it here first, folks, every single day. So make sure you click subscribe. It's great to be back. I have a lot of different ideas, different content ideas, different types of videos I'm going to be making to entertain you all. So I hope you are all here for the ride, and make sure you also like this video if you like the video. Now, Mike Maloney and Eric Sprott, surge in monetary demand shrinks gold to silver ratio 20-1 in play. This is from the Silver Academy, posted yesterday. They say that world debt levels will be the catalyst. Every time we talk about the gold to silver ratio, we're talking about it shrinking, meaning silver will be outperforming gold, which makes sense. Silver eventually will take on a life of its own, especially for how valuable it is, how useful it is in the world industrially, where gold really doesn't have as many uses. So we're talking about the ratio getting smaller, meaning that silver will be going higher as gold stays somewhat flat. I say somewhat because even talking about $5,000 gold, let's put the ratio, just for the sake of this video, where Mike Maloney's heading $300 range sounds crazy, but it's entirely possible. $5,000 gold at 20-1 puts silver at $250, right? I say $5,000 gold because that's where a lot of people think gold could go to. That's not that crazy to think about. And if silver is going to be pushing upwards hundreds of dollars, gold's not going to just stay at $3,200. It's also going to go up. Silver will just be at a much, much faster pace. But regardless, let's see what Mike Maloney has to say. So he posts this tweet, and it's linked to a YouTube video. I'll post the actual video in the description if you guys want to check out his video. $300 silver is entirely possible. And this is from Mike Maloney. I'm sure you guys know of him unless you live under a bridge, but he goes over the gold to silver ratio. Like I said, the last 75 years, the average gold to silver ratio is approximately 50-1. This puts silver at $64, already $14 above its all-time high. 1980, it was $50. 2011, it was $50, right? Two different situations pushing silver to $50 those two times, but still looking at where silver's headed or what brought silver to $50, those two instances definitely is possible in today's day and age, especially in today's day and age. Maloney's scenario is based on 10-1. Anything's possible, right? So they're talking about this timeline, right? You see, obviously, $50 silver in 2011 was more about the credit financial crisis, along that line of things, where in 1980 was more of the Hunt brothers cornering the market. Well, now we have both of those things happening. They say that world debt levels will be the catalyst. So Mike Maloney, a globally recognized precious metals analyst, has long argued that silver is not only undervalued, but also poised for an explosive price move. I want to stop right here. And if you guys watch my videos, you guys know I pause a lot because there's just so much context. And by the way, hopefully I'm not rusty. This is my first video officially back, so bear with me, as I get into the groove of things. But silver is not going to explode tonight, not tomorrow, not next week, not next month. Some people say next month, but that's missing the whole point. This is not a get-rich-quick scheme. This is wealth preservation as the dollar loses its purchasing power, as it basically burns away in your bank account. You're putting your money into something that holds its value. And if you want more proof of how silver is timeless to that aspect, well, then ask me or watch one of my videos where I explain that the situation comparing silver to a gallon of gas back in the day. I'm not going to go into it now. Maybe I will at the end of the video. But silver is like putting your money in a time capsule, basically. So in his recent analysis, Maloney lays out several scenarios that could realistically propel silver to $300 an ounce, a nearly tenfold increase from current levels. Here's a breakdown of his case. 1. The gold to silver ratio and historical undervaluation. So he emphasizes the extraordinary gold to silver ratio, which recently exceeded 100-1. And that was actually in March of 2020 when the gold to silver ratio was 125 to 1. That was when silver was like $11 and gold was setting all-time highs. It was ridiculous, but 100 to 1 is extremely high. 70 to 1 is the average. They're saying it could go down to 20 to 1. Now remember, the lower it goes, that means that silver's outperforming gold. The higher it goes, that means the gold's outperforming silver. Historically, such extremes have preceded massive outperformances by silver relative to gold. Maloney points out that during previous precious metals bull markets, when gold became perceived as expensive, investors shifted into silver, causing its price to surge rapidly. And there is a direct correlation between silver demand and the price. In the 1980 run-up, talking about the Hunt brothers pushing it to $50 in 1980, the ratio collapsed from 50 to 1 to 14 to 1. Silver dramatically outperformed gold. Today's even wider ratio, he argues, sets the stage for an even more explosive move if monetary demand returns. And that was what I was just saying. If that pushed silver to $50 back then the stars that are aligning for silver today could be a lot higher than $50, if you get what I'm saying. So he also, this is Mike Maloney's second point, technical patterns pointing to a breakout. Maloney also highlights technical chart formations, particularly the multi-decade cup and handle and inverse head and shoulders patterns in silver. These are classic bullish signals, and Maloney notes that current cup and handle stretches back 45 years. While technical analysis is not infallible, such long-term formations often precede major price breakouts. Maloney and other analysts see these patterns as supporting a scenario where silver could reach triple digits, potentially between $150 and $500 per ounce. Let me know in the comment section below if you think that is realistic. Now here's his third point, monetary demand and public participation. This is a huge factor, but number 4 is even a bigger factor, supply constraints and short squeeze potential. But let's see this monetary demand. A critical trigger, according to Mike Maloney, is a surge in monetary demand. Currently, both gold and silver are under-owned by the public and largely ignored by mainstream financial advisors who typically recommend zero allocation to precious metals. That's a good point. I'm actually going to be making a video tomorrow talking about billionaire Ray Dalio talking about this. And he's not the only billionaire, right? Warren Buffett, Jim Rogers, there's tons of billionaires that invest strictly into silver, specifically into silver, actually. Like Warren Buffett says he won't touch gold with a 10-foot pole. For a lot of the reasons why my name is Silver Slayer and not Gold Guy. The whole point is, though, that when money comes in, or when the everyday person, when your next door neighbor's talking about silver instead of Bitcoin or Amazon stocks, when silver is more mainstream, because right now only not even 1% of the population owns silver, but when it starts catching wind and people start putting more money into it, that definitely could be a big deal. Someone like Elon Musk coming out and saying buy silver. Look what he did to Dogecoin. Right? He tweeted DOGE on Twitter and shot Dogecoin up thousands of percent the same day. If people hop on board, that could definitely do some, that could influence the price astronomically. So that's what he's saying. Number 4, supply constraints and short squeeze potential. This is more up my alley of where I think silver's best bet of quote unquote exploding or skyrocketing would come from, is the massive silver shortage. And if you watch any of my videos, then this is, then you know this. And I've umpteenth amount of data and evidence showing where silver is going to be in the next 5 to 10 years and how that will and historically has affected the price. Just watch any of my videos or continue on. Now, supply constraints and short squeeze potential. Maloney also pointed to the growing mismatch between paper silver futures, ETFs, and the available metal. He's talking about the COMEX, right? The COMEX. There is not that much physical silver out there. If everyone tried to turn in those contracts into physical delivery, it would expose the facade. This is how they manipulate the market. With multiple traders staking claims on the same ounce of silver and a surge in short selling, there's potential for a historic short squeeze. And that's similar to what the Hunt brothers did, actually. They bought up all the silver on the COMEX and tried to turn it into physical delivery, and that just wasn't going to happen, so they had to ban silver on the spot and crash the price. But during all that, the shenanigans, it shot silver up to the highest price it's ever been till this day. If investors lose confidence in paper claims and demand physical delivery, the resulting scramble could send prices soaring, and that's literally what the Hunt brothers did, right? They didn't want their paper claims. They demanded the physical delivery. Now, David Bateman, who recently stood for delivery, purchasing 12.7 million ounces of silver. Wow. I'm going to have to cover this story. I didn't even know about this. This is insane. That is a lot. That is crazy. Bateman's impressive silver stack, a tech billionaire, stands for delivery. If 3 or 4 other billionaires follow his lead, this will send silver skyrocketing to the stratosphere. Now, I'm not saying that it would, or I'm not telling you that it definitely would, but, you know, the more, especially, and it's not even just billionaires' money, it's their influence. Other people finding out that that billionaires like David Bateman or Warren Buffett are buying it, or Elon Musk, whoever, that draws more eyes into it. People follow wealthy people like that. There's no coincidence that the wealthiest people in the world, almost all of them, invest into precious metals, gold or silver in some type of form. A lot of times it's actually physical. That's not ironic. That's not a coincidence. They know what they're doing. 5, and not only just billionaires, but also banks as well, and countries. The most powerful people, wealthiest banks, the most powerful countries all own precious metals in the physical. Look how much silver India has been buying over the past couple of years. It's insane. So number 5, economic slowdown in industrial demand. Finally, Maloney knows that silver supply is largely a byproduct of base metal mining. Yes, most silver is found by accident. They're looking for gold and other metals, lead, whatever, zinc. If they find silver, they'll take it, but there's not much silver mining going on. In a global economic slowdown, base metal production could fall, tightening silver supply just as monetary demand spikes. This supply-demand crunch would amplify any price move. Now, let's not only look at it that way, but look at demand rising. So you have people wanting more and more and more silver, not only people, but big tech, as silver is used in 5G and AI chips and windmills and satellites and solar panels and EVs and whatever. That's all booming. This tech rise booming. But let's say that metal production falls, which it has been. So we have a demand of around 1.4 billion ounces, but we have this supply of around 8 to 900 million ounces. That's hundreds of millions of ounces in the red. That is something that the last 4 or 5 years alone, we've acquired over 1 billion ounces in the red. Over 1 billion ounces in the red, and that's only getting worse as we're breaking these these record-breaking supply deficits are only going to continue for the foreseeable future. Where are we going to get the silver from? Right? Everyone wants a slice of the silver pie, but there's simply not enough pie to go around. Now, this is Mike Maloney's conclusion. $300 silver scenario is not based on a single catalyst, but rather confluence of historical, technical, and macroeconomic factors. And that's what I was saying as well. The stars are aligning. There's so many different reasons why silver has opportunity. There's so many different reasons. If even a few of those things align, such as spike in monetary demand, technical breakout, and supply squeeze, and $300 silver in his view is entirely possible. As with all investments, timing is uncertain, but Maloney's analysis suggests the ingredients for historical silver rally are already in the place. And yeah, I mean, on paper, this, and not even just on paper, just logically, rationally, silver has the most opportunity to do something much more than gold or any other type of investment, just because of how many things silver has going for it. And that's something that you should consider. Just like he said in his conclusion, though, the timing, that you shouldn't be trying to just get rich quick from this. This is wealth preservation. This is generational wealth. This is preserving your money as the dollar is deflating. So yeah, anyways, I thought this is a great article. I will link the video to Mike Maloney if you want to check it out. Also, I'll link this article from the Silver Academy. Make sure you guys subscribe. I post daily videos again. I'm so happy to be back. I love you all. Make sure you like the video. Leave a comment down below what you think about this. This was Silver Slayer. Thanks for tuning in. I'll see you guys tomorrow. Peace.